All right, as we have heard, we have a new Reserve Bank governor that's going to start in the new year. She's from Sweden. Her name is Dr Anna Breman. She was picked out of a short list of 10 or 5 people after 300 people were considered for the role of being the Reserve Bank governor, which is a controversial role and in this country attracts quite a lot of attention. Everybody's got an opinion about whether she's a diversity hire and she's going to learn te reo. And we had her in the news there saying she's going to meet New Zealanders, and people say it should be a New Zealander, or is it she's the first woman, which of course some women think is a big deal. But I sat there reading all this and I thought, actually, if you're going to ask me what does the Reserve Bank governor do, I'd have no frickin' idea, and I don't reckon the rest of you would either. So I thought what we should do is talk to a former Reserve Bank governor, also a doctor, and just try and get a working man's idea, a man on the street idea. Why is a Reserve Bank governor important and what do they do? So we're joined by Dr. Don Brash. Don, how are you?
Good morning, Sean. Very well indeed, thank you.
Well, it's one of those
talking to you.
One of those positions everyone talks about, and I just sat there and thought, well, why is it such a big deal? And what do you do as Reserve Bank governor? What's the job?
Well, I mean, the key issue in New Zealand, and indeed in most countries, is to control the inflation rate. New Zealand was the first country in the world to create the structure which we have and which Sweden also has. Prior to the 1989 Reserve Bank Act, the government of the day ran monetary policy. And because monetary policy works on inflation with a delay, it was manipulated often by politicians. They would ease monetary policy, drop interest rates, etc. Everyone felt good.
And you do that by what? You do that by signalling or by buying or issuing bonds?
Well, you in New Zealand's case, you do it by dropping the official cash rate. And the official cash rate is the interest rate which the Reserve Bank will pay to the banks on money deposited with them. And that sets a floor to the whole interest rate structure.
Okay, so now, that's the one tool that they've got.
Well, that's the primary tool they've got. I mean, Adrian Orr, for example, also did some long-term bond buying to disastrous effect, as it turned out. It cost the taxpayer a very large number of billions of dollars when those bonds went down in value. But you ask what the Reserve Bank does, the primary function is controlling the inflation rate.
Is it that hard a job, Don?
Well, it's hard in the sense that monetary policy operates with a long lag. It doesn't affect the inflation rate today or tomorrow. It affects it over the next 12 to 18 months. And in New Zealand, as in Sweden, in fact, the inflation rate that the Reserve Bank has to target is expressed as a range. You're not supposed to go below that inflation rate bottom of the range, in our case 1%, or above, which is 3%. Keep the inflation rate within 1 to 3, and that means you've got to look forward 12 or 18 months to see what the economy is going to be doing over that period. That's where the judgment lies.
All right. Now, there used to be a dual mandate, right? That's changed. It's gone back to a single mandate. What was the other mandate that the Reserve Bank governor had?
There was a brief period where there was a dual mandate. The Labour government in, I think, 2018, somewhere around that date, decided to change from a single mandate, which had been put in place by the 1989 Reserve Bank Act of the then Labour government, which said focus only on delivering price stability. The Labour government of the 2017-20 period said deliver low inflation and economic growth. And they said, look, that's what happens in the United States, that's what happens in Australia, why can't we do the same thing? The reality is that most countries had dual mandates when we didn't understand how monetary policy worked. Monetary policy in the long term only affects the inflation rate. It doesn't have much effect on the growth rate. So the Reserve Bank was told, focus on the thing which monetary policy can deliver. It can't deliver economic growth.
Don, I'm going to be honest. It sounds to me like this is really all about figures, because it's a figure you're trying to get in a certain range, right? The inflation figure. This is all numbers. Correct. It's all mathematics, right?
Well, it's not. It's mathematics in one sense because you measure your success or failure by numbers, but getting that number right is the challenge.
But you do that by getting data, which is more numbers, right? And you feed them into a matrix. So why don't we get AI to be the Reserve Bank governor? Why does the Reserve Bank governor even have to be a person?
Well, that's a fair question. Because when I was a governor, there was no AI, so I guess I used a person in those days. but I mean, quite apart from the numbers, a lot of the inflation success of a central bank is affecting expectations. And
but there are algorithms for expectations, Don. We can plot all this. That's how science works.
Well, the key is how do you affect public expectations? You do that by making it absolutely clear, talking to audiences up and down the country, and I gather the new governor is committed to doing that. I think that's great. To convince them that come hell or high water, you're going to deliver that inflation mandate.
But so you're just jawboning. You're just jawboning the figures then.
Jawboning is an important part of the role.
Well, is it? Because if you've got an algorithm running it or AI running it, it's never going to, you just set it and says, we're always going to do that. That's it. I don't need to go and give you a speech. That's the way the computer's been programmed.
Okay. But if the public are expecting inflation at 5 and you're delivering an inflation rate of 2, the consequence of that is higher unemployment.
Yeah.
That's why it's important.
But that's got nothing to do. You've just told me that the Reserve Bank governor doesn't have to worry about unemployment. They're about the inflation.
Well, that's correct. But clearly the government does not want a situation where monetary policy generates unemployment. And you do that by making decision-making and expectations consistent with the target. And that's part of the reason why the new governor says, I was spending time up and down the country explaining what I'm doing.
Okay. Presumably in Terreo as well. Is it a hard job, Don?
Is it a hard job? It requires a considerable knowledge of how the economy works. She has a PhD in economics. That's a good thing. I did also, as it happens.
Yeah.
But now, unlike the period when I was governor, the decision making is formally made by a monetary policy committee. All the members of which contribute to that decision. She is the chair of that committee, and finally is the most influential person on it for obvious reasons.
Yeah. Do you need to be a New Zealander to do the job well, or not? And is she the first foreign governor of the Reserve Bank or not?